Hi everyone, welcome back to Tax Vichara. I'm Navaneeth and I head the corporate tax function for a Bangalore-based multinational company. This is a platform where we bring you updates, knowledge and tips which should get you thinking on tax opportunities. This video may be of interest to you if you are a tax practitioner or a finance professional or a businessman with cross-border presence. This is the second video on how to explore and avail incentives introduced across geographies pursuant to COVID disruption. In the first video, I discussed the different parameters to be borne in mind by various governments while designing measures, the different types of incentives that have been introduced, and how to track incentives. Do watch the first video if you have not. In this video, I will highlight 1. Some interesting measures that have been adopted by various countries. 2. Some interesting points I have noticed while discussing the incentive claims with people across geographies. 3. Some points that you can consider while making representation to the Indian government on measures that they could consider. Most countries have a few points which are common, such as relaxing timelines to complete statutory compliances, introducing liquidity measures intended to let businesses borrow money at lower rates, etc. I have not discussed these measures in this video. Let's start with US and Europe and then understand the approach adopted by countries in the Southeast Asian region. The US government has introduced a very generous incentive program with over $2 trillion of incentive. It has set aside $350 billion to create a new paycheck protection program. Borrowers receiving loan through the PPP program may have all or a portion of their loans forgiven. The program would provide cash flow assistance through 100% federally guaranteed loans to employers who maintain their payroll during the emergency. Loans advance would not exceed 250% of the average monthly payroll cost. The maximum loan size is about $10 million. Loan forgiveness would be up to 8 weeks of payroll and operating expenses. And for any amounts that are not forgiven, the maximum loan term is 10 years. And the maximum interest rate is 4% with no loan fees or prepayment fee. There are complex rules on eligibility which may inter alia include appreciating the intent of introducing these incentives. There are FAQs that are being issued on various issues which are amenable to interpretation. Business concerns that do not employ more than 500 employees may be eligible. One also needs to examine and understand affiliation rules before concluding eligibility. There may be limited checks at the time of granting the loan given the constraint of time. There may be audits at a later point of time. Making an incorrect claim would also entail significant penalties and or prosecution. Interestingly, there were companies which applied for the loan forgiveness program which are in the process of withdrawing their application, where the claims could be based on stretched interpretations of qualifying requirements. There is also a payroll support program. A refundable tax credit is provided to offset the cost of providing a worker with paid sick and family leave. The caps on the amounts of qualified sick leave wages taken into account for each employee at $511 per day for 10 workdays. Similarly, family leave credit would offset $200 per day of wages for employees who must care for a loved one or whose child is at home because of school or daycare closing. There are other payroll incentives where operations were fully or partially suspended due to the shutdown order, or the gross receipts declined by more than 50% when compared to the same quarter in the previous year. Sweden has very liberal incentive scheme for wage subsidy. It provides tremendous amount of flexibility to employers in reducing their overall wage cost. The model is similar to the existing model of short time work. However, the subsidy level has significantly increased. Employees can have reduced working hours and continue to receive approximately 90% of their wage. This means that employees' wage cost can be reduced by over 1/2 in the hands of the employer. Let us say that an employer in Sweden has to lower production leading to reduced work time. The government steps in and picks up a part of the payroll cost. Let us say there's an 80% reduction in the working hours. The government would subsidize 60% of the total compensation and the employer picks up 28%. The employee would receive 88% of his or her paycheck with a reduction of approximately 12%. While Sweden has always had similar programs protecting the paycheck, I gather that these incentives are now more liberal. Sweden has a high level of social security contribution. The quantum of contribution has come down from 30% to 10% for a specified duration. Another interesting incentive in Sweden is that the government would subsidize landlords 50% of the discount provided on rentals. For example, if a tenant's fixed rent amounts to Swedish krona 100,000 per quarter and the landlord agrees to decrease the rent to krona 50,000, the landlord can receive 25,000 Swedish krona in compensation from the government. Singapore has several incentives targeted at businesses and individuals. In addition to accelerated write-offs of capital expenditure, corporate income tax rebates of approximately Sing$ 15,000, and government guaranteed loans which may be seen in some other countries, Singapore has some interesting incentives. Under the carryback relief scheme, qualifying deductions may be carried back up to 3 immediately preceding years. Enhanced property tax rebates for 2020 have been announced, replacing the first wave of property tax rebates. Increased property tax rebates range from 30% to 100% for specified sectors. Landlords, by and large, are also passing on the benefit of lower property tax to tenants. The incentive which is likely to be most impactful is the wage subsidy. Governments will pay up to 75% of April's wages for every worker in employment, capped at Sing$ 4,600. Wage support will be differentiated by sector for the remaining qualifying months. It would be in the range of 25% to 75% based on the industry. If you have a business in Malaysia that is impacted by COVID-19, it may be worth your time to examine the employee retention and wage subsidy programs that have been introduced. The objective of employee retention program is to provide financial assistance to employees who have agreed to take no pay leave. A sum of Malaysian ringgit 600 would be paid directly to the employees. On the other hand, under the wage subsidy program, a sum of 600 to 1200 Malaysian ringgit would be paid to the employer to ensure continuity of employment. This incentive would translate to roughly about 10,000 rupees to 21,000 rupees per employee per month. The smaller the size of the company, the larger the incentive per employee, and vice versa. This incentive can be availed where the salary range of the employee is below Malaysian ringgit 4,000 and there is a decline in revenues by 50% compared to the revenues earned in January 2020. Indonesia does not have wage incentives. However, Indonesia has provided tax reliefs to employees employed by certain sectors. The benefit is provided to employees earning less than IDR 200 million, that translates to roughly about 10 lakh rupees. Government would bear taxes for these employees for a period of 6 months. The government is also contemplating subsidizing insurance premiums for workers. Going against the grain, while most countries are deferring implementation of tax on e-commerce transactions to mitigate disruption, Indonesia has gone ahead and implemented this levy now. Not only have they introduced VAT on e-commerce transactions, they have also introduced electronic transaction tax. It is unclear whether ETT will be a form of turnover tax similar to a digital service tax or something else in entirety. Also, the scope of VAT on e-commerce transactions is unclear. Whether it will apply to B2C transaction remains to be seen. Corporate income tax rate will be reduced from 25% to 22% for the financial years 2020-21 and 20% for financial years 22 and onwards. This action is on the lines taken by India and some other South Asian countries to make sure that their tax rates are competitive and attract foreign investments while creating jobs. While the headline tax rate in Indonesia does not seem startling, ETRs of companies in Indonesia typically tend to be higher by 5 to 10% given the limitation in deductibility of several expenses. In UAE, There is a 1% refund on customs duty imposed on imported goods sold locally in UAE, starting 15th of March 2020 until 30th of June 2020. The UAE federal government has also announced a renewable 6-month suspension of work permit fee and reduction in labor and other charges to reduce the cost of doing business. The Dubai Free Zone Council has announced postponing rental payments for 6 months and reducing license fee and other renewable costs. These and other similar measures have been taken in UAE. Some interesting observations. I have seen certain instances where taxpayers may not use the benefit of relaxed timelines but rather accelerate the filings. Say, in scenarios where VAT refunds are due, or the ability to claim a certain loan is linked to the latest financial statements of filing. In such cases, companies tend to accelerate filings. Also, you may see that developed countries have introduced measures to enhance cash flows of business through both tax policy and non-tax measures. By and large, they have all introduced liberal wage incentives. The ones that we saw in US, Sweden, Singapore can also be seen in other developed geographies such as UK. They have also, in addition, focused on ensuring households' cash flows are not adversely impacted. In contrast, emerging countries have introduced measures to ensure protection of households' cash flows. However, liberal wage incentives have not been introduced. On the other hand, they have brought in regulations to ensure that employees are not retrenched during this period. While once tax up cost-saving measures, you may note that 70 to 80% of the savings may be in the form of incentives from governments during the period April to June 2020. There are certain benefits which are targeted at small and medium enterprise. Who would qualify as a small and medium enterprise is an assessment that has to be undertaken country by country. The determination may be based on share capital, the number of employees, turnover, loan availed, profitability, or a combination of the above. In some instances, these may need to be seen with reference to other affiliates in that geography. In other countries, they may need to be determined with reference to the group as a whole. You may want to read the fine print on the qualifying criteria as well as the penal consequences of making an incorrect claim before you go ahead and lodge the claim, especially when it entails a stretched interpretation of the law. The claims or incentives can rather be attractive but come with fairly rigorous penal consequences. Some measures India can consider: carryback of losses similar to those introduced in Singapore, weighted deduction on capex spends to spur economy on the lines introduced by Singapore, Malaysia, loan forgiveness program for small and medium businesses on the lines introduced by US, grants for disruptive business on the lines introduced by Finland, waive taxes for employees below a certain wage level on the lines introduced by Indonesia, and a liberal weighted deduction on continuing to maintain headcount or increase headcount on the lines introduced by South Africa. This benefit is already available in the statute in the form of 80JJAA. One may consider tweaks to this provision to enhance the benefit available to taxpayers. Permit GST refunds on donations made and tax deductions on COVID contributions or spends. That was a quick summary of some interesting measures in developed as well as developing countries. Thank you so much for watching, and I will see you in the next video. I would like to hear your thoughts and experience on interesting incentives you have explored and claimed. Do write to me and share your feedback on the video. Thank you.